Good afternoon, everyone. This is Brad Matheny. Today is July 11th. This is the end of day wrap up of the Plan Your Trade video. Now, today was a breaking pattern. Let me come back over here, bring this up, get rid of this again. Today was a breaking pattern, up or down in counter trending mode. I warned this morning the counter trend normally means going against the current trend, but I believed that we were going to see a moderate CPI number, which could continue the extended rally to the upside. So we're going to take a look at what caused this big breakdown. And really, I mean, to summarize it, I think this is a big emotional move. I think what happened was a CPI number came in exactly at 3, right in line with expectations. It gave no reason for the Fed to consider changing rates or decreasing rates. And that probably changed a lot of expectations related to the Fed being pushed to try to maybe lower rates. What we're really looking at, folks, is the potential for a rolling kind of a trend right now, an emotional reaction to CPI. But the data, as I keep telling my friends and my subscribers, I mean, what's really changed? The Fed was probably going to keep rates where they're at anyway. We're moving into Q2 earnings, which is probably going to be pretty strong. We have a big emotional reaction right now. I'll show it to you on the chart over here. But we have a big emotional reaction taking place one day. And I will just scrunch this down, spread this apart. Big emotional reaction on a counter trending breakdown mode, but it really just wipes out yesterday. Okay, QQQ might be a little bit more. Nasdaq's down 400 points. That's a big move. So let's take a look at the QQQ. Yeah, see, QQQ's wiped out 3 days of upward activity, going all the way back here to the 5th. But again, what we have here is an emotional response and capital shifting into other sectors. So understand that where we're at right here with this big pullback is we're still in bullish trending. We've got a bit of rotation here under the RSI. We're still in bullish trending here, very close, and still in bullish trending here. And again, when you take a look at this and you really consider what this looks like, we've seen these kinds of pullback rally, pullback rally, pullback rally, pullback rally, pullback rally. They happen all the time. Sometimes they're only 1 or 2 bars. So again, we're looking at my SPY cycle patterns. And what we're looking at really is if this is an emotional response, if this is just literally a pullback, and we're moving into Friday in a carryover mode, and then Monday and then Tuesday potentially up here in the 565, 566 area, I'm not going to change these. I'm either going to be right or wrong. This is not me trying to alter my interpretation. What I do with these patterns is I try to play them out as I see them. So in this way, I'm not going to try to reverse optimize or try to lie to you guys. It says, oh, look, I was right or I was wrong. I was technically wrong today. The SPY cycle pattern was 100% right. So look, I saw this breaking up-down pattern and counter trend. Technically, that counter trend should have been a trend going against the previous trend. I came out this morning and said that I believe that we would see, if I go near to the 30-minute, my expectation was that we would see a pullback. And I even pushed out a video about this morning, trying to show you guys that, look, it looks like I'm right on target, but the market had a deeper unwinding to go. Because when we got right down here into this area, I pushed up a video that time basically saying, look, the pullback looks perfect. Now we just got to wait through. I figured right around noontime, we'd start to see an upward rally phase. We have not seen an upward rally. We're starting to see one now. And, we only have 30 minutes to go into the close. we could see a pretty strong short squeeze here or just a nice little flat rally. But again, on the SPY, and remember, this is the cycle patterns are for the SPY. We've had a big solid pullback. Now we move back into carryover trending. So what is the trend? Is the trend down or is the trend up? You tell me. We come back here. You tell me. Is the trend up or down right now? The way I envision trend based on the SPY cycle patterns is I typically look at the last 3 to 5 days. Okay, so ignore this bar right here, the black one. Look at the last 3 to 5 days. So is it up or down? It's obviously up. Okay, a counter trend then would mean that this would be counter to the last 3 to 5 days trending. A carryover, which is our next pattern, we get the carryover in carryover mode, would to me mean that we are going to resume back into some upward trending, which is the general trend. Even if you take into consideration where we're at right here, we're still in an upward trend. We're still moving higher. I think we're going to move back into carryover mode and probably move back up into this 566, 568, maybe even 570 area before we see that big breakdown. And if not, if I'm wrong, we'll see how it plays out. But, like I said, it's very difficult to predict 3 to 10 days out into the future. And like I said, even though I've been dead on through pretty much all of this, except for this day here and this momentum rally day here, I urge you, give it a try. If you think you can outdo me, try to predict the next 10 days on your chart. See how you do. Okay. I mean, just really give it a shot. But again, where we're at with this, I think this is a big emotional move. I think it's going to play out fairly well. I think overall, like I said, I'm coming back down here to the 30-minute chart. I want to show you guys that we are moving into upward trending. Okay, we're very close to the end of the day. We're starting to see this hook up. We've seen this stochastic hook up. We've seen a roll down here. We come down here to 15-minute, and you can see here that we've already rolled upward with RSI, rolled upward with stochastics, and getting ready to roll up with the longer term stochastics. And the GAN vibration indicator is already flipped up. You can see it's flipping around a little bit. But remember, with this upward trending RSI, upward trending stochastics, this is intermediate term trending with an intermediate term upward GAN vibrational index. I would suggest that we're trying to find support here. We've got a anchor bar right here to the upside. We've got these intermediate anchor bars here. I would suggest we're going to maybe see a short squeeze into the end of trading today. And I would, I would be watching here to see if we get any real confirmation of an upward trend on a 30-minute or an hourly bar. Right now, we do not have upward confirmation on a 30-minute, and we do not, I believe, have any upward confirmation on the hourly. No, not yet. So again, we're not getting any real confirmation here. Remember, the data, what has really changed, folks? Nothing, as far as I'm concerned. Emotional response to the CPI data today, yeah, that's pretty much what I agree. I think this was a big emotional response. I think the way traders took the data is bummer. Now the Fed doesn't have any reason to cut rates. Bummer. Now we don't have any reason to see some kind of easing of Fed policy. If the data comes in strong, and remember, we want the data to come in strong. We do not want to see a market suddenly collapsing. We do not, after all the stimulus we've had, with all the money that's been spent. I mean, honestly, guys, like I keep saying in my posts, the U.S. economy is the 900-pound gorilla throughout the globe. There's literally nothing that is keeping up with the U.S. economy and the strength of the U.S. dollar. Now, do we want this to continue forever? No, we want it to balance out eventually. But while we have spent all this money post COVID, and while we're having this effect, we do need GDP, real earnings, real wages to settle and grow over the next 5, 6, 7 years very efficiently. So understand, folks, having a fairly strong market trend is a pretty good thing, and having a pretty strong economy is a pretty good thing, and being the 900-pound gorilla right now is a pretty good thing as well. So notice we just saw a good pop here in the market. Okay, not huge, but let's come back down to 30 minutes. There we go. We got our pop. So there's a good trigger on the 30 minutes. We've got an intermediate long trigger here, almost a solid long trigger here. We need to see this carry up. But like I was telling you, we're getting that rotation. We're starting to get that squeeze. Let's come down here to 10 minutes. There we go, starting to get that squeeze up. We could see a pretty big squeeze. I mean, at this point, we're about 50 cents away from 558. We could, I mean, it sounds wild, but we have 22 minutes to go. And you know what? We could be back up here in the 560 area by the end of the day. I've seen it happen. I really have seen, like, literally the last 10, 11 minutes just skyrocket higher and squeeze the shorts. So my advice to you is, if you took a beating today and or you weren't prepared for this, or you tried to chase it or whatever, just remember the idea here is to live another day, to be able to trade another day, and to learn to take measured steps. You're not trying to leap 4,000 miles. What you want to remember is you want to do it one safe step at a time, taking advantage of the opportunities the market gives you. Okay? More tomorrow. Remember, we get the carryover trigger tomorrow, then we slide into the weekend, then we get into that exhaustion topping pattern. So we'll see how it plays out. Okay, guys, thanks a lot. Talk to you tomorrow.